So hi everyone. So today we are doing the fraud prevention and deterrence of the CFA exam, chapter number 5, auditors fraud related responsibilities. So let's go through the external auditor audit standards. So here we are talking about the ISA 240. We are talking about the ISA 240. When we talk about external audit standards related to the fraud regulations, we are talking about the professional standards and the best practices, the guidance that govern the auditors in carrying out their anti-fraud responsibilities. We are talking about, so which has been mentioned in the IS 240. Okay, the auditor's responsibility to the fraud is in an audit and financial statements. So as per the IS 240, so it is the responsibility of the auditor to focus on areas where there is a risk. What kind of risk? Risk of material misstatement. So risk of material misstatement. Okay, due to the fraud, including the management fraud. So here we are talking about the attitude of the professional skepticism. Okay, notwithstanding with the auditor's past experience, questioning mind, and critical assessment of the audit evidence. So um, the error or the fraud. Let's go with one by one. So we are talking about the attitude of the auditor, and then we have the error or the fraud. So how he is going to differentiate what is an error and what is a fraud, because it is very much subjective from one person to another person. So is it intentional and unintentional? That is going to differentiate the fraud. Then the primary responsibility, the primary responsibility part. So under the primary responsibilities, we have seen the PND fraud, the TCWG, and the management part with their supervision place system. So an auditor responsibility here, when we talk about the fourth one, is what is the responsibility of the auditor? So auditor's responsibility. So responsibility here we are talking about the reasonable assurance that the financial statements that he is giving, taken as a whole, are free from material misstatements, whether caused by error or fraud. So with an unbiased statement assurance that he has to give. So this is what you can see under the IAS 240. ISA, not IAS, ISA 240. Now we'll be seeing the ISA 315 as well. ISA 315. So it is more about identifying and assessing the risk of material misstatement, assessing the risk of material misstatements. Through underwriting the entity and its environment part. So under this, what we are going to see is the auditor shall perform the following procedures to obtain the information for use in identifying the risk of the material misstatement due to fraud, inquires of the management and others within the entity. He's going to inquire of those who have been charged with the governance. He's going to evaluate of unusual activities or unexpected relationship identified. He is going to get into consideration of other information part, evaluation of the fraud risk factors that the company is under, and which cannot be easily ranked, and a professional judgment. He is going to use this under the ISA 315. Then we have the ISA 330. ISA 330. So under this, what is happening is auditors' responses to the assessed risks. What exactly he feels like. So we are talking about the auditor's response to whatever the thing that he has assessed, the assessed risks. Okay, the assessed risks. So here he is going they are to be applied in relation to the risk of the material misstatements that he has identified and due to be fraud. So the auditor, what is doing, he shall determine overall responses to address the assessed risk of material misstatement due to fraud at the financial statements. Then the auditor procedure responsive to assess risk of material misstatements due to fraud at the assertion levels, then auditor procedures that he has carried on responsive to the risk related to the management override of control, like he's going to make inquiries, reviews, investigations, and significant transactions part, evaluation of audit evidences through the analytical procedure in indicators of fraud. Then auditors enable to continue the engagement, like they need to discuss at appropriate levels, discuss for any professional or a legal requirement to report, a management representation, like they need technology responsibilities, PND part, fraud, disclosure for any fraud part, communication to the management regarding those things who have been charged with the governance part on a timely basis so that they can identify any fraud, if any. Communications to regulatory and enforcement authorities in case there is a legal responsibility on the auditor to be mentioned as a part of his confidentiality. He has to ensure that. And then documentation regarding under a statement of environment and assessment of risk, significant decisions, assess risk of material misstatement. So these are the things that IAS 330 covers in related to the auditor response for the risk that has been assessed by him. Then we have the IOSCO, that is International Organization of Securities Commission Principles of Auditors Oversight. Okay, so here it's again very important the effective auditors oversight combined with the strong enforcement measures. So it's very important the objectives uh, of organization members to cooperate in developing, implementing, and promoting adherence to internationally recognized and consistent standards of regulations, oversight, and enforcement in order to protect the investors, in order to protect and maintain fair, efficient, and transparent markets, and seek to address systematic risk, and to enhance the investors' protection, to enhance the investors' protection, in order to promote investors' confidence in the integrity of the securities and markets through a strengthened information exchange and cooperation in enforcement against misconduct and in supervision of markets and market intermediaries, to exchange information at uh, both global and regional level on their respective experiences in order to assess the development of markets, strengthen market infrastructure, and implement appropriate regulations. So ISCO, which is here, ISSCO, has undertaken considerable work regarding the auditors oversight issues in 2002. The technical committee related to the principles for auditors oversight. So they have listed certain principles for auditor oversight to be noted at several levels within the audit firm by professional associates. So we will see those principles of that in the next slide. So let's see these principles in short, in brief. We'll run through. Number one is just keep a note of it with the pen and paper, because there will be few, one, two questions, not many related to ASCO principles. Number one is investors' confidence through reliable financial information. Number two is protection of investors, independent auditors. Then we have the effective oversight by bodies independent of account profession and assessed security markets regulatory authorities. So these are the six oversights. Let's see the others as well. That is oversight of auditors, oversight by the bodies, qualification along with the independence body oversight process, discipline and remedial measures, international cooperation. So these are the few principles listed by the ASCO Technical Committee towards the auditors oversight. And there's also some public oversight, interest oversight board. Okay, so what is its role? So it is nothing but it's an independent um, uh, it's an independent global body. Okay, it is an independent global body that seeks to improve the quality and public interest focus on international auditing, education, and ethics standards promulgated by the International Federation of Accountants, that is IFAC. IFAC. Okay, through its oversight activities, the PIOB, that is the Public Interest Oversight Board, works to bring a greater transparency and integrity to the global audit profession. So Let's see the responsibilities of these auditors and the standard development. The accountability lies with the PIOB in setting these, in coordinating with the IFAC principles and others. So let's go with the next slide. So internal auditors fraud related responsibilities. So many companies or most of the companies which are as a mandatory audits are available are required. So they appoint an internal auditor to manage their pre-audit situation. So as a part of the international professional practice framework, that is IPPF, okay, the Institute of Internal Auditors, that is IIA, has developed the international standards for the professional practice of internal auditing. So as per them, there are certain responsibilities for preventing, detecting and assessing the risk of fraud within an organization. Number one is proficiency. In the proficiency part of it, that means the auditor has to be competent enough. Second is due professional care. So due professional care. So that is he has to be prudent, extend complexity, adequate of GRC, probe of error. So as an internal auditor of the related to the fraud and cost of assurance and the benefits part. Number three, we have reporting to senior management and fraud. Reporting to senior management and board. So related to the fraud part of it. So any significant risk or any control issues, the person has, the auditor, internal auditor has to report to the management and the board regarding the same. Number four is governance. So when you talk about governance, so the internal auditor has to assess and make recommendations to the related to the governance part. And then we have the risk management. So under the risk management, he has to recommend certain improvements, if any, evaluate the risk exposure the company is under. So all those things in his report. Then you have the control. In the control aspect, he has to continuously check the internal control mechanism and see any improvement is required and check the its adequacy part of it. And then seventh, the engagement objective. Engagement objective. So in the engagement objective, the auditor, internal auditor has to conduct certain preliminary assessment of risks and probability of significant error. Then we have the IPPF internal audit role in fighting fraud, how they are going to help us. So in considering the fraud, if you have the competent auditor and he's alert, he's able to evaluate the red flags, he's able to recommend the investigation when appropriate. So he's in a position. So the role of an internal auditor plays a very important in when it comes to fraud investigation, varies by organization. So internal audit may have primary responsibility for fraud investigation, may serve as a resource for investigation, or may have no involvement at all in the investigation. So it depends upon how you are going to use the internal resource. Then what are the other roles and responsibilities of the internal auditor or the auditor for the fraud prevention? Number one, so towards the BOD, that is board of directors, it's related to the governance. And then towards the account audit committee, it's related to overseeing the control. That is the internal control mechanism part. And then the management, towards the management, it's more about overseeing the activities of the employees. Towards the legal control, when we talk about, we are talking about advising the management part. Then when we talk about external auditor, when we talk about external auditor, the auditor is going to give to maintain the professional standard. And then less prevention, loss prevention manager, like they need to deal with the crime disaster and work with the internal auditor. Fraud investigation, like they need to detect and investigate the recovering other employees reports hotline, which is going to help them in whistleblowing and others, and the management part. So IAA, IPF also this has certain practicing guidelines, which we are going to see in next. So the IA reinforce following programs components. So here, turn at top, bribery and corruption risk assessments, policies, communications, monitoring, investigation, enforcement. So these are the few components of the internal auditors program. So now we need to check the international stand for government auditing. Here we are talking about INTOSAI operates, that is INTOSAI means it's a short form for the international stand for government auditing part of it. So operates as an umbrella organization for the external government audit community and provides an institutionalized framework for Supreme Audit Institution, that is SAI. Okay, Supreme Audit Institution part of it to promote development and transfer of knowledge, improve government auditing worldwide, and enhance the professional capabilities, standing, and influence of a member size in their respective countries. So here we are talking about the international standard of supreme audit institutions, that is ISSAI. ISSAI, that is international standards of supreme audit institutions. So the framework that they have is one is that the Lima Declaration. Okay, the Lima Declaration, that is a general percepts for auditing in the public sector. So that is here they are focusing on the public sector auditing part of it. Okay, so the main purpose of this Lima Declaration, okay, so that is LIMA, Lima Declaration, is to call for independent government auditing. Okay, that's it. Any public company, so you need to have an independent, okay, government auditing part. And the second thing is, this is the first thing. Second thing is to have an international code of conduct, code of ethics, not conduct, it's a code of ethics for auditors in the public sector fundamental auditing principles. And the third thing is more about fundamental auditing principles to lay the guidelines for the fundamental auditing principles. Okay, and then auditing guidelines. So these are the major things. So the general principles that they have um, uh, created were: one is the ethics and independence. Ethics and independence. Okay, independence part. Second is more about professional judgment. That is professional judgment. Then because you need to have a due diligence, due care, and skepticism part of it, you need to avoid those things. So that way, the third thing is your quality control. Quality control. And then you have the audit team management and skill. Then you have the audit risk. That is audit team management. Then the fifth one is your audit risk. What is the how you are going to manage that? And the sixth one is the materiality aspect. Then the seventh one is your documentation, how you are going to manage that. And then the eighth one is your communication. Eighth is the communication. So these are the 8 principles that they have recommended. And then there is also called as planning and audit. Planning and audit part of it. So here, the major aspect that they have covered is like auditors should ensure that the terms of the audit have been clearly established, one, during their engagement letter kind. And then second is the auditors should obtain an understanding of the nature of the entity or the program to be audited, like what exactly their work, nature of work will be. And then the third will be auditors should conduct a risk assessment or the problem analysis and revise this as necessary in response to the audit finding. Then the auditor should identify and assess the risk of fraud relevant to the audit objective. Then you have the auditor should plan their work to ensure that the audit is conducted in an effective and efficient manner. So that is the before the activity part, what you have seen. So during the activity, that is while conducting the audit part of it, that is second is conducting an audit. So during audit, what exactly you have to keep in mind, the principles. One, auditor should perform the audit procedures that provide sufficient and appropriate audit evidence to support the audit report. So what are the assurances that the auditor is mentioning on the in his report? They have to support with the appropriate evidence. Second, auditor should evaluate the audit evidence and draw conclusions. So his conclusion should not be biased. It should be based on the evidence and the facts part of it. Okay, and then after the investor conducting of the audit, the reporting part. When we talk about the reporting, so this is into the reporting. In the reporting and follow up, the auditor should prepare a report based on the conclusions that they have reached through the activities that they have done. Okay, so this brings to the end of this chapter number 5, that is audit fraud related responsibilities. So let's see in the next chapter number 6. Take care. Bye bye.